Hello everyone. So in this video, we're going to be looking at the observations the last couple of weeks that I've been making that have been showing me the cryptocurrency space and specifically Bitcoin leading the legacy markets, the S&P 500 and its components. Now I know right out of the gate, you're going to be rolling your eyes at me because that doesn't make much sense. The cryptocurrency space is this big and the legacy markets are this big. Why would something that small be leading the way? Well, I'll show you, and I'll show you how I've used that information on multiple trades to help me profit. Why does my opinion matter? Why do my observations matter? For those of you that have been watching my videos for a long time, you know that in the world of technical analysis, crypto YouTubers, I was one of the first ones to be constantly pointing out the correlation between Bitcoin and SPY. But it was always SPY leading the way. And I was constantly saying, Bitcoin is just doing what SPY is doing. There's a significant correlation. And back when I first started saying it, I received a ton of pushback. And I assume I'm going to see pushback from the statements that I'm making in this video as well. But now it's a generally accepted principle that that is how the markets are relating to each other. So my observations, I'd say I'm good at observing things in the markets and good at correlations because I look at screens and charts. I would say more than 98% of traders in the world. How can I say that? Yes, it's definitely just an assumption, but I know a number of things. Number one, if you are married or if you have a family, you cannot be putting as much time in as I do. It's just not possible to have those kinds of relationships unless they're falling apart. And I'm sorry if that's the case. Maybe get off the computer a little bit more, and that won't be the case. But the past 6 years, it's literally 360 days a year, I'm doing something related to the chart guys or something related to charts because I love it. I'm making videos every single weekend, Saturday, Sunday, 7 days a week, every holiday, and I am constantly watching both markets. I traded stocks long before crypto, and as soon as crypto fit into the picture, I'm just watching both constantly. So let's now take a deeper dive at the examples that I have seen over the last 2 weeks and how I have utilized them. All right, so we're going to start with the timeline here because it begins on February 4th. And February 4th, we had the big Bitcoin bull day where everything shifted. Really, the sentiment and everything shifted because at that point in time, it was a weak bounce. And then that big bull volume day, it was pretty much the most bullish day, the most bullish daily candle that we had seen since the all-time highs. And then from there, the bulls continued to control the rest of the next week. And it was a significant move. So I see that happen February 4th. And I'm looking around and I see the stock market is not reacting to it. It happened in the second half of the day. And you can see on Twitter, notable risk on shift in crypto this morning. It was in the morning, making me a bit more bullish with stocks. So this is the first time I'm observing something. And the fact that I'm acting on it, that's definitely an aggressive standpoint because it could have been nothing and it could have been wrong. And then I would have made the wrong decision. I would have stopped out and taken a loss. But this was just the first observation. I said, I'm playing NIO as everyone is looking for daily higher lows. So at that point in time, Bitcoin bull move on the morning and NIO was right here. So NIO had a big bull move off the low. Keeping in mind, we've been in a big time downtrend for 8 months. So solid move off the low. I know it doesn't mean anything unless we change the daily trend. We reject from EMA resistance and we pull back and we're scouting the daily higher low. So this is me looking for my entry because I played that oversold bounce and I played it pretty well. I had a great entry, but I exited real early. I exited my full swing position, something like there, and I missed a lot of that move up. I said, all right, I'm patiently waiting for the daily higher low. I see Bitcoin explode in the cryptocurrency space, and I say, I bet that's going to help us find our higher low. I also make note that we broke the low of the previous day, Thursday, with no follow through. So I establish, okay, I'm going back in, and it was before I normally would. I did not have a clear indication that the daily higher low was set at that point. I was acting on the crypto bull move. So I said, all right, I'm in that position. Then the weekend happens. And over the weekend, the crypto space continues to run. And that Monday, I say the entire crypto world market cap is up 17% since Friday morning, which is obviously massive when you're talking about the entire space. I'm surprised we're not seeing that confidence show up more places in the stock market, yet. So that's February 7th. And here is SPY, February 7th. Right here, not doing anything, little daily inside bar. Surprised we're not seeing that bull move yet. And then from there, the next 2 days, we see a solid bull move. Now, granted, it's only 2.5% in the broader market, but 2.5% is a decent amount. And if we go back to NIO from where I was positioned, we ended up going, and even if I bought at the high of the day on February 4th when I made that decision, that's a 10% move. A little bit less, but it was a 10% move which is obviously very worthwhile. So we then did get that bull move in the broader market in response. So that's probably one of the least convincing examples. So I've got more, but that was the first one that I used and it worked out. And again, could have been a coincidence. All right. One time it does not make a pattern. One time has me open my eyes and say, okay, I'm going to observe and watch for this pattern. From there, 2 more times fairly quickly, posted about it on Twitter here. And yesterday, Bitcoin hourly breakout was at 8 p.m. Eastern and the S&P 500 followed at 3 a.m. Eastern. So why does that matter? Because they were the same setups. At this point in time on February 14th, we are in a downtrend, consolidating on the daily timeframes and starting to level out. I've got the S&P 500 here on the left, and I've got Bitcoin here on the right. And Bitcoin, same thing, daily consolidation, and then starting to level out. So at that point in time, let's just look at the daily charts. Again, we're scouting a bounce here. This is the 14th, and Bitcoin at that point in time on the 14th was much healthier, still in a daily uptrend, scouting a higher low. So we then saw a Bitcoin bull move, 8 p.m. So the daily candle on Bitcoin closes 7 p.m. Eastern. And so right after that daily candle closed on Bitcoin, this happened. This big bull candle right there in the hourly. And if you look at it, it's the biggest hourly bull move that we had seen in about 4 days. Very notable. Little inverse head and shoulders. So huge move up. Not huge, but a very notable move up that has us saying, okay, daily higher low is set on Bitcoin now. From there, again, 8 p.m. So now we have 7 hours later. 7 hours later, 3 a.m. Eastern, there's some kind of Russia news, whatever the headline was at that point in time. That's the least important aspect. But that was a trigger that the futures chart shot up. And again, it's a very similar hourly candle. We had not a picture perfect inverse head and shoulders here, but again, very similar to what Bitcoin did 7 hours before. Okay, that's a second example. So now we're watching for the potential that this is a pattern. And if we get a third example, then that to me confirms, yes, this is a pattern. So now we're going to go to the 4-hour time frame. Because from there, got to find it on Bitcoin first. From there on the 4-hour time frame, we had a bull flag that confirmed with a lack of follow through. And that happened back here. So we're going to look at it, just trying to pinpoint where everything was. So the 15th here, I'm going to look at it on the hourly time frame. And at that point in time, it was a 4-hour bull flag that we were watching for. And we'll find it on the S&P 500 on the 15th. So again, this is the futures chart on the left. So Bitcoin, big bull move up after that breakout that preceded the broader market by 7 hours. It preceded the headline by 7 hours. So then we see a 4-hour bull flag attempt and it confirms. We get the higher high. But right after it confirms on the resistance break, we get multiple red hourly candles in a row to take us right back down under that support. The bull break to confirm the 4-hour bull flag happened at 6 p.m. Eastern on the 15th. And then that bear drop happened with the new daily candle rolling over 8 p.m. Then we have the S&P 500 futures. This was a 4-hour bull flag. Again, I'm showing it on the hourly time frame, so it doesn't look crisp and clean, but it was a 4-hour bull flag that confirmed with a higher high. And right after it confirms with a higher high, multiple red hourly candles take us right back down to where we came from and take out support. So it was the same 4-hour bull flag with 0 follow through. And again, it preceded that by about 8 hours or so. Bitcoin did it long before. Just seeing exactly when did that happen. So new candle, February 15th at 7 p.m. Eastern. And on the S&P 500, it happened at where are we? Right here. So there's your bull break, and there's your coming back down. About 7 hours later, 5 a.m. is when the bull break happened, and then we were pulling back 3, 4, 5 a.m. So that's now example number 3. And again, it's the same technical setup. And not only is it just me pinpointing this on the shorter term timeframes, it's the longer term timeframes doing the same thing as well. And if we pull up, here's the fourth example where this one is another one. I didn't use these ones for trading because I was sleeping. I wasn't taking advantage of 3 a.m. trading. But if we look at Bitcoin, most recently, actually I might have it here. So here's Bitcoin on the left, pull back, daily higher low, EMA 12 support, no major red flags, but we pulled back significantly enough. We got to be cautious of that daily lower high to be the result of the next bounce. We formed an inside bar, and the inside bar broke bear, again, when the daily candle rolled over. And that's the biggest thing that's clearly standing out. It's when the crypto candle rolls over, that's when its moves are being made, and then the futures chart reacts later. But the bear break happened very early into this new candle, so we'll say maybe 8, 9, 10 p.m. Eastern on February 17th's candle. Inside bar bear break. What does that tell us? That tells us the daily lower high is officially set. So then we head into the stock day. Again, 8 hours later, and I see this is IWM. I'm using IWM as an example because it's just as clear. I often use IWM as my growth, high risk, high reward stocks. And obviously crypto is high risk, high reward of its own sector. But it was a daily higher low here. The daily higher low set on February 14th. Daily higher low set on February 14th. So very similar daily charts. We're looking for the potential of an IWM lower high as well. So we're opening above the low of the previous day. And this was Wednesday. We're opening above the low of Wednesday. I can look over at Bitcoin and say, we are well below the low of Wednesday. The daily lower high is already set, and it's a very convincing bear break that has just taken place. So I headed into the day, Thursday morning, knowing which direction I'm looking at, and just waiting and saying, if IWM breaks that low, it's going to be doing the exact same thing Bitcoin just did 8 hours ago, and it's going to be following along. And so what I did was I exited. I was more aggressive exiting long positions, and I was adding short positions to protect any long positions that I had remaining open. So again, I used the information. It told me this is the direction you're looking on the morning. And that was very helpful and very useful. So out of the 4 examples I just gave, I used 2 of them to either make me money or help me save money. And the other 2 happened in the middle of the night. So this may disappear. And that's the thing with correlations. They come and they go. And this may no longer be the case. But again, it's happened enough that I know I am paying attention. And we'll be watching to see. You can see IWM even today. So Bitcoin yesterday broke to the lower low. IWM did not break to the lower low yesterday. Today it did. So again, it just gives clues. I'm not going to base trades solely. None of the trades that I took were solely based on this information. But I knew I was scouting an NIO daily higher low, and this was just a little nudge. Okay, well, that's another little point in favor of making an entry now. The probabilities will be a little bit higher, and maybe it just means I used larger position sizes as well. So it's influencing the trade game plans that I already have established, and just shifts probabilities of what I think is the most likely scenario. And again, it's been helpful. So whether or not, someone looks at this and says, that's BS, maybe I'm just lucking out multiple times, that may be the case. But again, I've seen enough where it's enough of a tell for me that I'm going to use this pattern that I have now observed over the last 2 weeks to benefit my trading. And that's the way it goes. And this is an example, whether or not you agree with this doesn't matter because, again, I've already used it. And this is just an example of how I recognize correlation. So I do this all the time when I'm trading stocks. I'm watching how the financial sector is acting relative to the tech sector. I'm watching to see if growth is showing relative strength to tell me if I want a long growth and short the weaker sector, the tech sector. So I'm always watching how these moving parts are interacting with each other. And this is just a nice concrete example of observations because so much of my technical analysis is observation. And I make the point where the amount of charts that I pull up compared to the amount of charts I actually take a trade on, 95% of the charts that I look at, I'm not trading. So that's just me putting in my time, putting in my homework, scouting trade setups, and looking to give myself as much information as possible to make my trading decisions. So leave a comment. Let me know what you think. Like and share and call me an idiot if you want. And do good things.